Welcome to the 5-Minute Trading Edge, brought to you by the Institutional Edge System. Well, both the college and NFL football seasons are underway, and if you've got a favorite team or favorite quarterback, you are either loving life or, as many of us are year after year, you're frustrated. Imagine going into a game, though, as a quarterback and not being able to see or read the defense. So this is your view of the world, and that's right, that's Tom Brady and the Patriots. But imagine going into a game, Tom Brady or not, deflated football or not, and not being able to see anything that's going on the other side of the line of scrimmage. So you have no idea where the safeties are. You have no idea if there's a blitz coming in. You have no idea where the concentration of the defense is. Boy, you are not in a position to run any sort of play, let alone even think about scoring. You're not in a position to call an audible. You're not in a position to take a timeout. You simply cannot play. Well, this is how millions of retail traders trade every day. They do it by attempting to look at blank candles sitting on a chart just like this one, hoping that somehow with the formation of the candles, the shape of the candles, however, support and resistance, that they'll be able to take advantage of swings or trends in the marketplace. But really, honestly, how often can you win when you're looking at one, two, three, four successive candles in a row that pretty much look the same? Does that tell me that I'm in a trend? Only after it happens. Leading up to something like this, how do I really know that this is bottoming out here? Would I get in here? Do I get in down here? How do I know that price is going to go on a run? A lot of retail traders will lean on a lagging indicator to somehow give them a red or a green arrow and trade as though they're in a video game. All of this happens while institutional traders know exactly what's going on. They've got a coaching staff and a system directly in their ear telling them what's happening as it's unfolding. And today we're going to talk about what you need to be seeing. It's the market footprint. Look at it this way. The market footprint is basically everything you're not seeing if you are a retail trader. It is all of the intelligence and real-time activity as to what's taking place on the other side of the line of scrimmage that you need to see to make good decisions. It's your confirmation that you're looking for on entries and exits, the conditions that you're hoping for to run or pass, to scalp or do a good position trade, to understand if you're in a trend or if you're nearing a reversal. And they also give you the information you need once you're in a trade to understand if conditions might be going against you, if it's time to get out sooner than you would have planned, or if there's another trend or reversal that you're on the wrong side of that you need to know about. Now, a lot of retail traders, as we talked about a second ago, they'll look at a candle, and sure, the candle tells us a lot of information, right? It tells us what the highest price was. It tells us where things opened, where it closed. If it's green, things went up. If it's red, things went down, but not a lot more than that. What we need is we need to see inside the candle. And seeing inside the candle real time gives us the information we need to know what's going on the buy side as well as the sell side. And sure, we pay attention to the overall shape of the candle, but we also need to know where the most volume went off inside that candle. And here we have the basic fundamentals of our footprint. So let's take a deeper look at this. Here's our footprint as we've got it with order flow sequence tracking. And let's start on the right and work our way over. So we have here volume at price. Volume at price tells us where all of the activity is taking place, and it dynamically updates using a 24-hour look back. It tells us the point of control, where the most volume is taking place. It tells us value area high and value area low, where conditions, if they're breached above, it could be in overbought conditions. Below, we could be in oversold conditions. And then we have our footprint. So within each successive candle, we have real-time intelligence as to what's happening. between buyers and sellers. These bold numbers here are imbalances. This tells us that buyers have come in overwhelmingly by a margin of 300% to take positions at these price levels. They're in bold there. Imagine knowing if the defense had a size advantage of 300%. Would that have an impact on the outcome of a game or a play? Would you make decisions differently? I think all of us would. This is summarized for us at the very top with the imbalance summary. In this case, we can see that the buyers outnumbered the sellers when it came to imbalances by 5-1. You can make it out there with just by eyeballing it. The other item that we have here is our delta. This is the final score or margin whereby the buyers in this case with a green 54.32 and a green 11.91 beat out the sellers. Sellers start to take over again here, negative 12.26, negative 18.57, 5.75. As I'm watching this with this information alone, and I'm seeing this activity taper out and sellers come back in, and I'm above value area high, is that a clue that we might be facing a reversal? Absolutely. Valuable information. So to recap, using the footprint, when you're looking to run plays, watch volume and value. You need to see that information at those price levels. Pay attention to the imbalances and deltas inside the candle with the close of each candle. And then run plays at the extremes. When price starts to top out, you'll know about it as the sellers come in. If it starts to bottom out within a region, you'll know about it when the buyers step in. If you'd like to see how you can profit by using the market footprint, watch our free 4-part training at institutionaledgesystem.com. Thanks for your time.